Hello and welcome to Trading 5 Talents. In this video, I want to walk through some ideas that I had about reducing the risk of this directional iron fly bot that I made on Option Alpha. So just to give a brief recap of what this trading bot does is it opens up an iron butterfly or an iron fly on SPY every day. And it first determines the trend of SPY by using the 5 and the 14-day EMA. And it is either opening up a 3 or 5 DTE iron fly every day at noon and then closing out for 10% profit or 20% stop loss. And if neither of those are reached, then just one day before expiration, it will exit towards the end of the day. So what you see here is a candlestick chart from April of this year all the way until today, or yesterday actually. And this is when I started the bot. And I made this bot using Option Alpha. There's a link down in the description if you want to try it for free, and then you can look in the community and just search for Directional Ironfly Bot and you'll be able to see it, clone it, and then adjust if you want to, or just let it run in a paper trading environment to see how it works for you. But overall, this bot has had just under 75% win rate from where you see the arrow all the way until now. And so it's been doing really well. And I just want to see if, there's any tweaks that could be made to improve it even slightly, or if it's just fine, sort of out of the box. So here is an analysis of the the closed positions that I've used with this bot. This is the Option Alpha platform, at least on the Analyze tab of the platform. And you can see that the win rate right here, 74.6%. My average win is $59. Average loss is $118. And the days in trade are 1.5 days. So that's approximately how long you're in each trade. Therefore, you really don't have more than 2 trades going on at one time. So if everything is working so well, why am I even, fiddling with it? Well, the one thing that really stands out to me that I'd like to try to reduce if possible is this number right here. And this is the average risk that I'm taking with every single trade. So the risk is $536. And then I'm, gaining about $59 from that. So is that worth it? I'm not exactly, 100% sure that it is, but it has been working so far. But I want to see if I can do a little bit better with this. So that's what the topic of this video is. So the basic idea is if I can reduce the risk while still preserving the profit of this bot, then I would be, much happier running this bot. So currently, these are the numbers that are being generated from this bot. So the width of the iron fly that's being opened by this bot is a 10 strike wide iron fly. Profit target is 10%. The stop loss is negative 20%. So those are in yellow because this is how I'm going to name the bot going forward. For comparison's sake, it's the 10-10-20 bot. My average risk was $536. So to find what my credit was, obviously as you open a trade, you're going to know what your credit is, but back calculating it from the risk, you just take the width of the strikes. So that's 10. So that would be equivalent to $1,000 minus the risk. So that would be $464. Therefore, that was my credit. That's my average credit is $464. Now my profit is a little greater than 10%. And that's because when the positions open up the following day and there's a gap in the favor of the bot's profit area, then you can close for a much higher than 10% profit. So the average profit I'm getting is about $59, even though the average credit is $464. Okay, the average loss, as you saw from the previous picture, was negative 118, or $118 loss. Win rate 74.6%. So one thing that I'm going to be trying, again, in paper, is this iteration right here. This is the 10-20-20. And all I'm doing here is just increasing the profit target up to 20%. So instead of going for 10% profit, I'm going to go for 20% profit. Credit is going to stay the same. My risk is going to stay the same. The only difference is that my profit goes up to $118 on average. And what is the win rate for that? I'm not sure. I'm still testing it. So I'd like to see if I can, still keep, a greater than 60% win rate. And then this one would be profitable as well. The next iteration that I'd like to run and test is this one right here in green. This is the 5-20-20. And so now I am tightening the widths of the strikes of each wing of the iron fly so that they're only 5 strikes wide, going for 20%, stop loss at 20%. Now my average credit, based on the few trades that I have run already, the average credit is $333. Okay, so $500, because that's the width of the iron fly multiplied by 100. So $500 minus $333 in credit. My risk would be $167, but the profit is now $66. My stop loss, or my loss average, should theoretically be $66 as well. What is the win rate? Again, I don't know. I got to test it. But here, at least, you can see that I'm reducing the risk as well as keeping the profit approximately the same on paper. But again, once I test it, hopefully these numbers will not be too far off. And then the final iteration that I'm doing right now is the 2-20-20. And so 2 strikes wide on either side of the iron fly, 20% profit target, 20% stop loss. So my average credit here is $169. And the risk is only $31. Again, that's the 200 minus the 169. So that's the $31 risk. My profit target would be $34. And the way that I'm getting that $34 profit target is because 20% of the credit, well, first of all, 10% of the credit is about $17. So 20% of the credit is going to be about $34. So $34 in profit, theoretically, and also a $34 loss, theoretically. So it's these numbers right here that are shaded that I'm not exactly sure of if they're going to hold up, but I do know from the 3, 4, 5 trades that I have done already in my paper trading account using Option Alpha that the credits are those are the average credits that I'm getting right now. $333 for the 5-20-20, $169 for the 2-20-20. So I am confident with those numbers. I just don't know if I'm going to be hitting these profit targets. Now, one interesting thing to note with the blue one in the last column, the 2-20-20, is notice that the loss is greater. The loss of $34 is greater than the risk that you're taking on. So in that case, you'll never even hit the stop loss of that negative 20% because you can't lose more than what you're risking, $31. So that was pretty interesting to me when I first saw it. So that was really good. However, as we'll look at later on in the video, getting to that $34 might be a little bit of a challenge. So these are the 4 iterations that I'm going to be testing in Option Alpha, and I'll be reporting back to see if the 10-10-20 is still the best iteration, or if we can actually reduce the risk and still preserve the profit by using one of these other iterations. So make sure you subscribe and turn on the notifications so you can be notified when that video comes out. Here is a screenshot of OptionStrat, and this is a tool that I use quite frequently to analyze your options trades. And I have a video on this already on a walkthrough of how to use it. There's a link down in the description. I just use the free version. I don't pay for the premium version. I just use the free one. And what I've shown up here is a trade that would have been opened last Tuesday, and it would have expired yesterday. So these are results, or these are the numbers that would have been accurate when I opened the trade. So for the 10-10-20 iteration of the iron fly trade, you can see SPY was at $448.29 up here in the upper left. This was a neutral iron fly that was open, so the at the money strikes are $448. And then this is a 10 wide iron fly, so the long call is going to be $458. The long put is going to be $438, $10 wide from that center strike. Now you can see here the credit was $449. The max loss is $1,000 minus that, which is $551. And that's what you see over here on the right-hand side as well. So what would the profit be if we were to exit at 10%? Well, it would be about $45. So 10% of that $449 received would be about $45. So what would the loss be? Well, theoretically, it would be twice the profit, so negative $90. So it's this setup right here that has been working very well since the beginning of June this past year. And it follows the trend, as I mentioned in my last video. So when it went from that bull market and it had its peak and then a correction, this bot still followed the trend. It still held that 76% win rate. So that's really good. But one thing that I'd like to look at in these iterations is, when am I able to take this profit? So if I'm looking for a profit goal of $45 here, if we take a look at the table version of option strat on this trade, right now this is just the profit and loss graph, but here is the table version. And you can see the iron fly is still 10 strikes wide. It's the same one we're looking at in the previous slide. But now, when am I going to reach that $45? So if the trade was opened, here on this Tuesday, when do I start getting into about $45 in profit? Well, it looks like it's at the open of the next day. So this is less than 1 days in trade, so less than 1 DIT. So if we open at noon, by 9:30, if SPY stayed around $47, $48 by the next morning, then yes, I would have reached that 10% profit in less than 24 hours. And that's normally what I've been seeing. Sometimes it goes a little bit longer, but again, this is just showing how the trade would play out if SPY stayed exactly where it was, when you open the trade. And that's what we would want, because this was a neutral iron fly that opened. Remember, this directional iron fly bot opens up a neutral iron fly, or it can open up a bullish skewed iron fly or a bearish skewed iron fly, depending on where the price is relative to the 5 and the 14-day EMAs. So the take home from this is that less than 1 DIT for the 10-10-20. Now let's look at the 10-20-20. So the trade is going to stay the same. It's a 10 strike wide. Profit target now is $90 because we're going for 20%. So going back to the table, when do we reach this $90? Well, you can see we reach it right about here, the opening of the second day. So we open it at noon on the 29th on Tuesday. So at noon on the 30th on Wednesday is 24 hours. And then at open of the next day, before we get to that 48-hour mark, we potentially could see that profit. So that would be about 1.5 DIT. Is this number accurate? I'm not sure. That's why I'm testing it, but I'm just sort of forecasting what could happen. That we just have to hold this trade a little bit longer to make more profit, and of course that makes sense. All right, going on to the 5-20-20. So here you can see in the profit and loss graph, the profit area is smaller. What you see here in these diagonal white lines, this was the 10 strike wide, and then here is the 5 strike wide in the green, and you can see that up here by the strikes. So the credit is $341. The risk would be $159. Again, the width of the strikes times 100, so 500, minus the credit, 341, equals $159. So what is the profit? Well, it would be 20% of the credit. So 10% is $34, 20% would be about $68, and that's right here. The loss, of course, would be the same, negative $68. So when do we reach a $68 profit target using the 5-20-20? Well, if we look at the table, you can see that it's really the same as the 10-20-20. So if you're going for 20% profit, then you're going to probably be in the trade for about 1.5 days. Now let's look at the 2-20-20. You can once again see the profit target is shrinking. Over here in the diagonal white lines was the 10 strike wide iron fly trade. You can also see from this profit and loss diagram, look how small this max loss is. Right here. The max loss is only $26 in this trade. Net credit is $174 if it were to expire exactly right at this point, which is a very low probability, but that's when you would receive that max credit. Okay, credit 174, risk $26. The profit is 20% of the credit, so that's going to be about $34, and then the loss is negative $34. However, you can see that you can't lose $34 on this trade. The max you can lose is $26. So this stop loss would never even be touched in this case right here. So when would we reach this $34 in profit? Well, if we were to look at the table, you can see that the $34 in profit would be reached on the third day. So here's the morning of the first day, morning of the second day, morning of the third day is when you could actually get out of this trade for that 20% profit. So that would be about 2.5 days in the trade. However, I'd like to point out in this red arrow, according to the bot settings, this is when the trade would actually close. It closes 1 day before expiration. Now, the reason I have that in there is more of a safeguard. It's a personal preference, because if I let this go into the day of expiration and the trade isn't filled, I don't want to be assigned on any legs of these. So that's why I want to get out when there's still a better chance of getting out, and I don't want to hold it into the day of expiration. So if that's the case, if those settings are the same, we'd never be able to get to the profit target for this 2020 iteration because we'd be exiting the day before. Now, of course, this doesn't mean that this is the only time the profit target could be reached. It could be reached over here in this day, depending on the volatility and the movement of the of SPY. But if all things were equal, when you open the trade, you can expect to be in this trade for 2.5 days. So I'm not exactly sure if any of these other iterations, the gray one, the green one, the blue one, are going to work any better than the original yellow one, the 10-10-20. But I'd like to try. And if you can do it for free in a paper environment, it's safe, it's not costing you anything, then that's why I want to try. I'll report back and let you know what those results are. So if you have any questions, please leave them down below in the comments section. I'll try to get to them as quickly as possible. In the meantime, trade wisely. Take care.